think certainly it's been contained for now, but a lot of uncertainty still remains. Now we have had lots of comments from Janet Yellen, also Jay Powell. Last week, there were concerns that they were slightly conflicted in exactly what they were prepared to offer for depositors. Certainly, we know that banks have accessed a huge amount from emergency Fed funds, particularly to the 15th of March, and that has probably continued. We'll await some indications there. Certainly, when Janet Yellen gave her testimony, first of all, it was reassuring. Then there was some kind of concern that actually all Fed deposits, all banking deposits wouldn't be guaranteed. So there is still this lingering worry that there could be fresh problems bubbling up in particularly the sector for US regional banks, because we're in this still high interest rate environment, and it's not the asset prices so dramatically for some portfolios.
Absolutely. Investors looking at this very closely. They're looking at the implication of these rate rises, which are, of course, as well contributing to recession concerns. Do you think global central banks from the Fed to the ECB to the BOE have just thrown fuel on the fire with last week's rate hikes? Investors want to know what the forward trajectory of these central banks is going to look like to ultimately help determine their investment strategy from here, but there's not a lot of clarity out there.
Well, they're between a rock and a hard place. If they had pressed pause last week on those rate hikes, which had been widely expected, I think that also would have shown that they were particularly concerned about this banking crisis. And of course, what they want to do is try and shore up confidence instead. And remember as well, they're looking to those inflation numbers in the UK. Inflation ticked back up in February to 10.4%. And so the majority of policymakers around the table at the Bank of England's Monetary Policy Committee really thought we've got one last potentially hike here. And this is why I'm saying potentially. I think it is more likely now that they will press pause in May, but obviously it depends on just how sticky inflation continues to be. The big worry, of course, is that banks are going to become more risk averse to lending, and that could have repercussions in terms of economic growth, another drag on economic growth. And has already been pointed out, this could essentially be the equivalent of another rate hike. So certainly we are very near the peak. And I do think we have indications of that from Jay Powell at the Federal Reserve. So it's very difficult for them to lay out a real map right now, given how changeable the situation is.